So after a pretty strong recovery, it feels like Bitcoin and, well, the whole crypto market are kind of hitting a wall. Is this just the market catching its breath, or is the rally totally over? We're going to dig into some new analysis that lays out a really clear roadmap for what could be coming next. Let's get right into it.
Right, this is the big one. The question that probably keeps a lot of crypto investors up at night. I mean, all that recent green on the charts felt great, but was it a real, sustainable recovery? Or was it a classic bull trap? Designed to lure everybody in just before the floor drops out.
To get to the bottom of this, we've got to tackle these key questions head on. We're going to look at whether this rally was just a fake out, try to pinpoint some potential new entry points, and then lay out the absolutely critical price targets that investors are watching right now.
You know how it is in crypto, everything starts with the market leader. So first up, let's decode what Bitcoin's price is telling us. Because as we all know, wherever Bitcoin goes, the rest of the market usually isn't too far behind.
Okay, so this right here is probably the most important chart pattern to understand at the moment. For weeks, that $90,000 to $92,000 range was a hard ceiling, what traders call resistance, that Bitcoin just couldn't break through. The huge news is that it finally smashed through it, and now it's treating that old ceiling as a new floor or support. And look, in the world of technical analysis, that's a classic and very powerful bullish signal.
What's really exciting here is that this price action is starting to paint the picture of a classic uptrend. It's a pattern called a higher high, higher low, and it's basically the textbook signal that a market is building strength for a real sustained move up. And this breaks down exactly how that pattern works. First, you get the breakout above that old ceiling we just talked about. Step 2, the market pulls back a bit. This is what's called a healthy correction, to test that old ceiling as a new floor. And finally, step 3, if that floor holds strong, you get the next big push up to a new, higher peak. The key takeaway from the analysis is that Bitcoin seems to be smack in the middle of step 2 right now.
So what's the magic number to watch? Well, this analysis is pinpointing this range, between $94,000 and $95,000, as the likely bottom of this healthy correction. This is being highlighted as the golden entry point, really, for anyone who felt like they missed that first big breakout.
Okay, so the case for Bitcoin is looking pretty solid. But what does that mean for the thousands of other cryptocurrencies out there? Well, that brings us to a really key concept called Bitcoin dominance, which can actually unlock some huge opportunities in other parts of the market. Bitcoin dominance is pretty much exactly what it sounds like. It's the slice of the entire crypto pie that's currently sitting in Bitcoin. When this number goes up, it's a super clear signal that money is flowing out of altcoins and into Bitcoin. And right now, the analysis shows that dominance is definitely on the rise. And here's the direct result of that. As Bitcoin basically sucks up all the capital and shows strength, the altcoins, like Ethereum, start to bleed, and their prices correct downwards. This is a classic capital rotation that we see happen time and time again in the crypto markets. But, and this is the key contrarian insight from this analysis, this bleeding in the altcoin market isn't a reason to panic. It's actually the opportunity. See, while everyone's attention is laser focused on Bitcoin, the prices of other really fantastic projects get pushed down, essentially putting them on sale for investors who are paying attention. So, with all that context in mind, let's get down to the brass tacks, the numbers. Here is the specific game plan laying out the key price levels that this analysis says to watch for both Bitcoin and Ethereum. For Bitcoin, the game plan laid out is super clear. The entry point to watch for is during this little pullback, right around that $94,000 to $95,000 mark. The absolute line in the sand, the critical support that has to hold, is that $90,000 to $92,000 zone. Now, if it holds, the first major target is that huge psychological barrier of 100K, with a second target up at 108K. And now for Ethereum, we're seeing a really similar strategy. That pullback we talked about creates a potential entry zone between $3,150 and $3,200. If the price can bounce from there, the analysis lays out a few short-term targets, $3,400, $3,600, and $3,800. But the biggest hurdle, the major resistance to keep an eye on, is that key $4,000 level. So all of this brings us to one final, really crucial question. We've been calling this a healthy correction, but what if it isn't? What if this is the start of an actual crash? Let's take a look at the final verdict from this analysis.
And the source is very, very direct on this point. It says that yes, a downfall correction is coming, and it's likely what we're in right now, but then it adds this critical distinction. This is not a crash.
So the ultimate sentiment here is really one of confidence. The conclusion is that this is a healthy, predictable, and frankly necessary market movement. It's just the market taking a breath before its next big leg up. It's definitely not a signal to hit the panic button.
Which leaves us with one final, powerful question. If this analysis is on the money, then this market weakness isn't something to be afraid of at all. In fact, it might just be the exact discount that patient investors have been waiting for. The only question you have to ask yourself is, do you agree? Thanks for tuning in.